welcome one, welcome all to the Sunday night Deathburger program from the Voice of Galt, a production of JohnGaltFLA.com in cooperation with the Watchman.fm. You can hear my weekly program Monday through Friday from 6 to 8 p.m. Eastern, 3 to 5 Pacific, only at www.thewatchman.fm. The markets last week took a rather nasty turn, sort of a barren wasteland of burning everything, destroying the hopes and dreams of many. So we started off with the usual Deathburger theme with the Krispy Kremes, because we're going to talk about Municide, but let's get into the markets themselves. The weekly chart of the Dow for the last 3 years shows that this particular week ended in a key inflection point. Same for the S&P 500. Whenever you see this formation, the formation that follows in the following 2 weeks will determine the next move. Now, we could easily correct severely on the S&P and the Dow. Not the biggest deal. Let's watch what happens before Thanksgiving. Gold also had a major move up and then fail back down thanks to some maneuvers by the COMEX, primarily affecting silver but also other commodities. There was a strong rally in the dollar and a lot of disruptions in Europe, which are playing into the particulars of the gold market. I'm not too concerned. Gold could actually survive a correction of over $200 per ounce and move finally, as reflected in the SLV or silver ETF. The paper silver market had a nice rally to a new current high and then promptly reversed itself, finishing slightly down for the week. Again, the bottom line is not the short-term moves. Both markets are overcooked, due for a correction. Don't get excited, or you can set your hair on fire and run around the room. Personally, I'm not going to lose any sleep over what's happening in those markets. Now, the market you should worry about, Municide. Here's the PIMCO Municipal Income Fund. It's not a heavily traded fund, that's why I didn't use a candlestick, but the models calculate an estimated price valuation. As you can see, we've had a fairly steep decline in this particular municipal bond fund, as are all of them. Took the beating of all beatings. The next one is the Alliance Bernstein National Municipal Income Fund. This one took a nice severe drop. Down again on Friday, another 0.3%, but all of them have the same pattern. Another one, the Alliance California Fund, California being one of the triggers, but not the only one. Alliance California Municipal Fund took a huge drop, another 0.23% on Friday, pacing itself downward but still rolling over in a waterfall fashion, as did the BlackRock Municipal Income Fund. You see where I'm going with this. This is all related to Municide. I'm not going to sit there and hit every chart and talk about it, because you can look at these charts and see for yourself. This Florida chart didn't exactly collapse, but you can see where it's getting ready to roll over. These stocks are just huge run-ups over the last 3 years, and now we're rolling over because of the actual problems in municipalities. Here's the BlackRock California Municipal Income Trust. It took a beating. You're going to see more and more. I'm going to go highlight part of the problems within the Municide. New York also. Every state had this issue. From the article Municide that I wrote in February 2008, you have 3 key things. 1, real estate never declines. Total lie. 2, the insurance companies, they didn't have the actual assets to back it up. Here's the bond buyer municipal chart on a daily basis. You can see it rolled over nicely, and we're looking at a pretty substantial decline. You can go through this over and over. BlackRock again, another one gets shellacked. The key thing that you have to understand, and this is all pertinent to the article I wrote in February of 2008, the municipal bond market was predicated on safety and steady, reliable ratings. The funds were supposed to return a good, steady, safe rate of return to the investors. Who primarily invests in tax-free or municipal bond funds? The elderly, the pension programs, not just state and government pension programs, but also many, and I do repeat, many of the programs set up by corporations. Look at these little funds. Here's another California fund. Took a shellacking this week, below the 200-day moving average. Here's another one, Dreyfus. Again, municipal income, below the 200-day moving average. Didn't recover before the end of the week. These people depended on the ability of the states, counties, cities, libraries, hospitals, school systems to pay them back. Here's another one. It just goes on and on and on. Eaton Vance, same thing. I started off this week picking on PIMCO on my blog at johngaldfla.com. But as you go through this, you see various states outside of California have the same problems. This is the EIO as a symbol, Eaton Vance Ohio Municipal Bond Fund. Ohio is another one of those states lurking in the dark, and as soon as it rolls over, we're going to get slammed nationwide by the complications from them having a city or state default. Michigan, long established as a state with problems because of its policies regarding overtaxation and the burden it puts on business and individuals, it's also being hinted at. Also, if you'll note when you're looking at these charts, look at the 50 and 200 day moving averages. Both indicate that they're starting to roll over to the negative side, starting to move forth. These are only 6-month charts. Ohio Municipal Trust Income Fund, Eaton Vance Ohio Municipal Income Trust. It had a severe day, didn't make the 200, rolled way down. Pennsylvania had a very bad week. This is a daily chart. As you can see, it recovered back above the 200-day moving average, but Pennsylvania, the people who have the money invested in this are telling you something, that they're liquidating out of these funds and watching what's happening in the various states. Even some of the states you don't think about got hit very hard. Federated Premier Municipal Income Fund, shellacked below the 200-day moving average, rolling over on the 50, 200-day flattening out. Goldman Sachs, high yield. This one is modeled, and when I say modeled, there's not enough volume to sit there and show it in a candlestick pattern, so they have computer models when there is no volume, calculate what the price would be. In this case, it's already dropped down below 855. I look for that just to continue to roll over during the week next week. Graham McDonald, intermediate, same thing. The low volume ones are usually ones where the money is just parked, but if they start to roll over severely, there's going to be a large rush of cash coming out. This is the one that you saw in almost every blog this week, HYD, Market Vector's High Yield Municipal Index ETF. The ETFs really took a beating in this regard. Municide is occurring, and it is a very painful experience. Invesco, same thing, didn't recover the 200-day moving average. 50-day, the blue line at the top, rolled over, going negative. We will probably see a death cross soon. Let's go to another one. Market Vector's Long Municipal Index ETF did not recover the 200-day moving average. The 50 has made a pronounced move to the downside. They're liquidating municipal bond funds because the fear of inflation is there. Here's a series of shares, MUAA shares 2012 S&P AMT Free Municipal Series. Dropped severely, heading south. Here's the 2013 version. The 200-day moving average just appeared as the duration has finally reached that point from issuance. The 50 days gone negative. The stock closed below the 200-day. Same for the 2014. People are anticipating in the next 2 to 3 years massive inflation, which makes owning municipal bonds a loser if the inflation rate is higher, even as far out as the year 2017, where the 50 days moved down, and the 200-day. It held this week. It just became apparent on the charts. I don't think it's going to hold in the future. Here's one of the unexpected states, Minnesota, starting to roll over, bounced back after some very light selling, but it didn't have very heavy buying heading into the end of last week. Minnesota is a state to watch because they're going to start having issues, particularly as the citizens lose more of their manufacturing base. Newburgh, Berman, New York. New York is one of the states with grave financial issues. If you start looking at every New York fund that appears in tonight's broadcast, you'll notice the severity of the drops. The 50-day moving average rolling over, unable to hold the 200-day moving average on a closing basis. Another Newburgh, Berman, California. California once again is the highlight. People are trying to get the hell out of any investments in California because of the anticipation of Jerry Brown preferring to bring the federal government in or reschedule payments on municipal bonds or even default. The Nuveen, Connecticut, once again another state that elected a bunch of loopheads into office who don't have a clue on how to balance a budget other than trying to raise taxes on a state which produces nothing and is only a suburb of New York City, and people can't get rid of their houses to get the hell out of there fast enough. It's an ongoing problem. Arizona starting to break down. A state with massive real estate issues. You're going to see problems in the property tax collections, again part of the municide issue. Study which states have had the worst real estate issues. You'll get a hint on what the biggest wave of municipal defaults will be. Another one, North Carolina, not getting a lot of headlines or highlights, but North Carolina's got major fiscal issues, especially if Bank of America continues to have financial issues and the financial system begins to collapse again, which I anticipate it shall. The banking center of Charlotte will be like a black hole sucking the rest of the state into it. North Carolina's worth watching. Georgia never has really recovered. The housing market is a total disaster now in the rural areas as well as in the metro Atlanta area. No sign of that area, that region recovering anytime soon. And the loss of a manufacturing bases that it once had is being reflected in the lack of tax collections. California again, Nuveen insured California Tax-Free Advantage Municipal Fund. Shellacked below the 200-day moving average. It's not going to end pretty for California. Another closed-end ETF, this is a price return index, gives you an idea of the severity of the drop. You have the 50-day moving average rolling over, the 200-day still ascending. We're going to see a death cross in this particular index and ETF. You'll be able to watch the price. Pennsylvania again, another one. This particular fund, Nuveen Pennsylvania, did not sit there and recover the 200-day moving average. The 50-day has rolled over. The severity of the drop is quite obvious. PIMCO, the one I picked on all week and on my show on Tuesday. Here you go. California Municipal Income Fund. Boom. Gone. Out of here. Shellacked. Next chart. Another California PIMCO fund. And it makes you wonder if the Fed is buying up PIMCO's treasuries to sit there and offset their losses in the Municipal Income Fund. I'm going to watch that as QE2 begins on Monday. It will bear all of our attention during the week to come. Here's the Municipal and Intermediate Municipal Bond Strategy Fund. Got a lot of publicity because of the severity of the drop and who it is and a lot of the municipal bonds that are supposedly contained within this fund. It got hit hard. Very hard. Here's the big one, PMF, the PIMCO Municipal Income Fund, going from $14.37 to almost $15 a share down to $13 is a substantial drop. People are starting to pay attention to these moves, and that's why it hit the media in such a hard fashion. Here's the New York PIMCO Fund. Again, New York, basket case to be. Not exactly recovering like it should, and that should be a concern for everyone. And lastly, my home state, I found a chart for a Voyager Florida Insured Municipal Income Fund. The first Florida chart I showed you wasn't so bad. This one's worse. I'm going to have to get a hold of the information on this fund, see what cities are involved. This is Municide in action, collapsing equities in municipal bond funds, which reflect the future of these states. Big money's betting on a collapse of the entire muni complex. If this continues for another couple of weeks, it's all over but the crying. Add that in with the financial system collapse or recollapsing and the potential frauds. It's going to get ugly. Stay tuned to John Galt on the Voice of Galt via the Watchman.fm Monday through Friday from 6 to 8 p.m. I'm only at the Watchman.fm. We're hoping to have some special guests this week. I hope each and every one of you enjoy the program. When you hear the interval signal, the V for victory from the BBC, you'll know the Voice of Galt is on the air. For the Voice of Galt, this is John Galt speaking. God bless and good night now.
Will the Federal Reserve monetize this debt?
The Federal Reserve will not monetize the debt.
Finally, really did it. You maniac! You blew it up! Damn you! Damn you all to hell!
Because I am hard, you will not like me. But the more you hate me, the more you will learn.